Hi, I'm Natalie Brunell, and thanks so much for checking out the Coin Stories podcast video page. I am talking to the legends in Bitcoin about their backstories, career paths, and why they believe in BTC. This podcast does not provide financial advice. This episode is brought to you by the Bitcoin Conference 2022. It's going to be held in Miami next year, April 6th through 9th, and it is going to be a 4-day amazing festival with 2 general admission days, an industry day, and Soundfest. Tens of thousands of people will make their way to Miami, and I wanted to share some photos from the 2021 conference because that event is one of the reasons Coin Stories took off, and I was able to secure such amazing interviews with legends like Michael Saylor. Now, you want to get your ticket pretty soon because hotels are booking up fast. I know I recently just booked. So head to b.tc/conference to get your pass and use Coin Stories as the code for 10% off. This episode is also brought to you by OKCoin, one of my favorite new places to buy Bitcoin. OKCoin is the fastest growing exchange serving over 190 countries globally with the easiest onboarding and lowest fees around. They're on a mission to make learning about and buying Bitcoin easier than ever, and they're all about bringing more financial literacy to everyone, which is something I really care about as well. From being the only exchange to integrate Lightning to contributing over $1 million to Bitcoin core devs, they are doing incredible work to further the Bitcoin ecosystem. You can head to go.okcoin.com/Natalie for $50 in Bitcoin when you sign up. Super excited to share my guest today is Ross Gerber. He's one of the only investment advisors I know from the legacy traditional finance world who's carving out a strong Bitcoin portfolio strategy for his clients. He's the co-founder and CEO of Gerber Kawasaki Wealth and Investment Management, and he's often seen in the media commentating on business news and now crypto. His company oversees $1.8 billion in investments, and his was the first RIA to partner with Gemini and begin offering digital assets to customers. Here's Ross. Ross, thank you so much for joining me. I want to start the story at the very, very beginning. So I read that you're born and raised in Los Angeles, beautiful, sunny LA. So tell me a little bit about your upbringing. You went to Brentwood High School. Let's take it all the way back.
Wow, you're going there, huh? Yeah, I grew up in Southern California, a beautiful day today. I was very fortunate in that, you know, my dad's a dentist and he also is from LA, went to Venice High. And he did pretty well as a dentist. And I grew up in the 80s. And the 80s in LA was a crazy time. It was a real estate boom and people had money. And going to private schools, you know, a private school and, you know, in the 80s in LA, I was, you know, around ridiculous levels of, you know, sort of wealth and extremeness. There were a couple movies made sort of similar to how I grew up, one being Less Than Zero and the other being Dazed and Confused. And I always say my childhood was somewhere between those 2 movies combined. But I was very fortunate. I went to University of Pennsylvania out of leaving Brentwood. You know, I was lucky. I was sort of like top in my class and then went to Penn and I wanted to study business at Wharton. And when I got to Wharton, I realized really quickly that most of the people there their mindset was very conservative and very narrow-minded. And that didn't really fit my thinking because at that time I was a hippie deadhead, you know, following the dead and going to Wharton classes, which was really kind of a weird dichotomy, literally going to like Philadelphia Spectrum shows and then showing up at Wharton the next day with a bunch of conservative guys wearing suits in class in college, which I found to be incredibly weird, you know? So college was hard for me because culturally the East Coast is very, very different than the West Coast. And I didn't adapt well. And I still have never adapted to East Coast culture versus West Coast culture. So I'm definitely, you know, Snoop, you know, I'm West Coast. Yeah. And then after that, I wanted to be in the music industry because I'm a musician actually, and I play music. And that's when I learned my first lesson that the music industry is a horrible, horrible place to try to make a living. And so at the time, the tech boom was just starting and Napster was big. And I said, instead of me trying to get involved with a bunch of people who have no idea what's about to happen with technology that's going to wipe out the music industry the way they know it, which it did, I'm going to get involved with technology. And so I got licensed to be a financial advisor at 23 and started selling mutual funds in IRAs to people through SunAmerica, which was a regional thing. And within about 3 years, I became top producer in the company within 2 years. And then I was running an office in my third year, and I was running the top office. By my fourth year, I was one of the top offices in all of SunAmerica, the firm, which was very big. And I was the youngest $1 million plus branch manager in the history of that company. So the 90s were good.
Wow. Yeah, I read that. Okay, wait. Before we talk a little bit more
that's my childhood.
Yeah. Okay. Wait. So before we talk a little bit more about SunAmerica, because I want to hear about that, just going back, I want to hear more about your life in SoCal, because I grew up outside Chicago and we constantly had like movies on. And I think that's one of the reasons why I wanted to go into media in general. And I fantasized about life in California. It was like, it was all the cool shows took place there. Hollywood was like the center of the world there. So what was it like? Because I also remember, I mean, I've seen interviews with like Arnold Schwarzenegger talking about coming here in the 70s, and he could buy a place for like 30 grand, 40 grand in Venice, and now it's worth a fortune. So can you talk a little bit more about, life in SoCal?
Well, the problem is my mom might actually like listen to this. So, there's many parts of my life, because we grew up differently. In my generation, there were no phones and video cameras, and nobody really knew what we did. And I know my parents still don't know what I did. I don't want to say too much, because unfortunately and fortunately, I grew up in a very wild scene, and much of it involved drugs and alcohol and underage clubs and lots of money and trips and private planes. And,
wow. Did
you know, imagine.
Were you aware that you were like very fortunate compared to other?
I was aware, because I thought I was kind of like the poor guy. Like,
no way.
Like my dad was a dentist. Like that was like nothing in the 80s. Like people were like buying and selling buildings in the 80s, like making millions and millions. Like I had friends who had their own jet, had massive mansions that we used to just like hang out in, and their parents were never home, like never. So like in this one case, this one friend of mine had the largest house, like piece of land in Brentwood, and his parents were divorced, and his mom lived there, and she was never there. So we literally had this massive house with like 14 teenagers partying, like, and no parents, like none.
Oh my goodness. Okay, but so you must have been young when you picked up music, and then I also read that you got gifted some stocks when you were like 13. So did that spark the investment mindset for you?
Yeah. So, well, what it was, my family's always been investors, and so when I was a kid, my grandfather was retired, and my father worked really hard. So I was kind of confused why grandpa doesn't have to work, and I go over to his house, and boy, my grandfather wasn't rich though. He was like, I would consider middle class, but he was retired and he was fine. Like he didn't want to work. And my dad's like a worker, and he still is working. And so I was much more fascinated how my grandfather got to hang out. I was like, this is appealing. How do you get this money, grandpa? Oh, it's dividend checks, it's stocks. So I wanted to learn how that worked, because I thought it was pretty cool that somebody would just send you money in the mail for doing nothing. So I was like, he's like, it's a dividend, it's ownership. You own a company and they pay you the profits. And I said, boy, this is a lot better than working. I got to do what grandpa's doing. So I wanted to learn about the stock market. My mom then taught me about the stock market. She had learned also from her father, which was my grandfather. And so when I was a kid, I worked as a waiter, and I delivered pizzas actually first. And then I worked at a waiter at this crazy place called Santa Pietro's with this crazy mafia guy who owned it. And Paula Abdul was his wife, and crazy people used to come in there. A million stories about that place and all the crazy things that went on there. But my mom would take my money and say, you need to invest this. And back then you would put your money in the bank, you'd earn 6%, like it was kind of crazy. Yeah. Oh yeah. Crazy. I got a 6% money market. And my mom's like, that's not good enough. We got to invest it. And we would buy Disney stock. And so when I was about 16 or so, Disney split 3-for-1. And I didn't really understand what that was. And she was like, oh, they're going to send you more shares, And I'm like, this is the best thing I've ever seen. They send you checks and then they give you more shares. Like what do I have to do? This is so easy. So I was sold on investing at a young age. I started really actively trading as a teenager. And then back then I would have to call my mom Smith Barney broker, who hated me because he like didn't want to trade. He like didn't want a 14-year-old kid bothering him, or I was probably 17 then. And then when I was like in my early 20s, Charles Schwab came out with online trading. And there was this thing called a laptop invented. So they invented a laptop, Dell did, and they invented this thing called Windows 95. And they invented this thing called the internet and online trading. And that was all in the mid 90s. And I was like, I'm sold. I was the first real online day trader in the world. Maybe, probably not, but it sounds good on a podcast. But like, I can't think of anybody else in 1995 that was sitting at an investment firm with a laptop trading stocks on your AOL connection. Okay.
Wow. So you set off to be an investment.
At my firm, they were like, what are you doing with that machine? Because they had literally, I know I don't look this old. It wasn't that long ago. It was 25 years ago. But like literally, we did not have computers. There were no computers.
Yeah, yeah.
So I was like this guy who brought in the computer, and this was like my first great proclamation. One day, all of you will have a computer on your desk. One day, everybody will have a computer on their desk. And one day, everybody will have a computer at their house. And they looked at me like, what the heck are you talking about? Okay. One day, everybody's going to have AOL. And I invested in all that. Dell, AOL, Microsoft. And I was a millionaire at a young age.
Wow. That's amazing. Okay, wait. So
until it ended. And then I became not a millionaire. So the story isn't that easy.
Okay. So yeah, let's get to that. So you branch off from school. You obviously were a good student. You had a knack for this. You went to SunAmerica. You became the youngest multi-million dollar broker there, right? How did that really happen? I mean, what do you think set you apart to where you were really good at this and you were able to achieve that?
Well, first of all, I think one of my greatest skills in this business is the ability to communicate with people on the level that they understand. See, a lot of people in finance want to talk fancy stuff. They want to talk big terms. They want to feel smart. They want to feel smarter than other people, or they feel that these terms and explanations build credibility with people who don't quite understand it, because it's like they understand. It's like when the doctor says, oh, you got this weird disease. You don't even know what he's talking about, but because he's a doctor, you figure he's got to be smart. I don't understand. So like finance people kind of do the same thing, and accountants too, where it's like, I got to sound smart because I want to make sure this person knows I'm competent. But what's happening is you're kind of confusing people. And so it's not that people are dumb, it's finance. It's just not taught anywhere. So like most people, it's just a lack of ever being taught any of this. So what I do is educate clients what this is. Most people think stocks are just gambling. You ask them today. I would bet you 95% of Robinhood customers thinks the stock market is gambling.
Yeah, well, I would say a lot of people say it's manipulated. It's just totally rigged. The system's rigged.
Yeah, it is rigged, but it's rigged to go up. So if it's rigged to go up, you shouldn't complain.
Yeah.
Okay. But you definitely shouldn't be shorting stocks knowing that it's rigged to go up. But that being said, if it's rigged to go up, this is a very easy game to play. Okay. It's not that hard. People just, they want to trade. They want to do this. They want to gamble. And if you're gambling in the stock market, you're going to lose over time, just like when you're gambling in Vegas.
Well, let me ask you, I mean, this gets into kind of a tangent, but what are your thoughts on money printing? Because the more that
I wish I could do it.
Look, I get that it obviously benefits asset holders, and we're hitting all-time highs right in the stock market, even though our economy hasn't recovered. But really, it does hurt the fabric of America in terms of like the middle class, the savers, the people who are not investing in stocks. What are your thoughts on it? Because you're on the side of the spectrum that I would imagine benefits from it.
Okay, so firstly, if you put your money in the bank, if you have your money in JP Morgan or Chase or Wells Fargo, it's the absolute dumbest thing you can do with your money. I have no sympathy for people who will take 0% interest from a bank, can't get a loan from the same bank that will pay you 0% interest, right? And they can't think of anything else they can do, no matter how many TV shows I go on, no matter how many podcasts I do, they can't get on the phone and call somebody like me and say, how can I get 2% interest instead of 0? Okay.
But that's the
That's
majority
it.
of Americans.
So I have no sympathy for people who can't pick up a phone or an email and ask a question of how do I get a better rate of return with a low level of risk. Okay. My firm exists to help people, and certainly I'll help anybody and answer that question. So it doesn't hurt the fabric of America. What it hurts is the value of our American system. So the idea of money printing without having to pay interest is a wonderful thing if you're the money printer. Okay. So for Biden or Trump or whoever's president, it was like, I can just spend money and there's no repercussion. And the problem with that over time is there will be a repercussion eventually. So conceptually, to think that interest rates will be zero for the rest of our lives is obviously as ignorant of a thought as you could come up with, right? There's no way that'll happen. Okay. And in fact, it's already changing. Like today, interest rates went to 6.1 and the market just crumbled, right? So it's 1.61 and that's scary to people, but rates should really be at like 2.61 right now.
Yeah.
Okay. So because the government has gotten a pass on having to pay for the money it's borrowing, it continues to act irresponsibly. So higher rates act as a way to force governments to act responsibly with their spending and their habits and their behavior. And we've seen this with Japan. Japan has more debt than anybody in the world, and they just announced another massive stimulus package, and they cannot grow no matter how much money they print, no matter how much. And somehow they have this massive debt, which I don't even know who pays and what. And the Japanese system is the most confusing system I've ever seen in economics. It makes no sense to me. Okay. It's probably one of the worst built economies I've ever seen. Okay. Which basically is what we're becoming.
Yeah.
Okay. So having a generation of Americans who think they're going to get checks from AOC for the rest of their lives to keep their standard of living just above poverty, but that's okay, is a horrible system to build.
You're totally right.
It's a horrible system to build. It's just, capitalism is the best system. Working people earning money is the best system for lots of reasons, but mostly productivity. Mm-hmm. Okay. But if you start to think about what's happening with cryptocurrencies, it's 100% related to this mentality the government has. Because what's happened, and it started in the financial crisis, was some geniuses came up with this idea to build their own non-inflationary digital currency that's decentralized, out of the hands of the idiots that want to print money, out of the hands of any people. That it's a decentralized, no one person will control it. There is no Fed chair of Bitcoin. Okay. And we'll build this system not because it's just we want to build it. It's because it needs to be built because our system is collapsing. Bitcoin was 100% created because our system was collapsing. Okay. There was no other reason for it, and there was no other utility for it. It existed because of the ignorance and greed of our financial system and the big banks. And that continues today, and Bitcoin gets bigger and bigger and bigger, and the idiots still don't get it. They don't get it.
You're right.
And so we're all in crypto, and I think in 10 years, JP Morgan Chase won't exist. I think that if you look at GE, what just happened? Mm-hmm. If you look at Johnson & Johnson, what just happened? That's what's going to happen to JP Morgan in the next 10 years. Wells Fargo, JP Morgan, gone, not going to make it.
Okay, well, we're going to get more into Bitcoin, but I want to hear, you've experienced crashes and bubbles. You were, .com bubble, boom, housing bubble, boom. And you mentioned earlier that you were a multimillionaire and then that wasn't the case. So
that's happened twice. Yeah.
Yeah. Talk to me a little bit about that. Cause you've seen
losing all your money. It's fun.
Well, tell me about that. But also, government response when the economy is trying to contract does the opposite, right? It expands the money supply even worse and it props up the bubble. And now the bubble's bigger and it has to be popped at some point, right? So let's chat about that.
Remember, there's high valuations and then there's bubbles. Mm-hmm. And I definitely have been in bubbles. I've been a beneficiary and a victim of bubbles. And being a victim of the bubbles of two in particular, and especially during the financial crisis where I really got hurt, I really financially got hurt. My firm got hurt. Everybody got hurt, like real bad. And it's super important in life to think about financial planning as like a survival game more than a game of aggression, So the goal of building your finances is to build financial security, not to have the most amount of money. Okay. You follow me here? So like my job isn't to make you the most amount of money. It's to build your financial security 100%. Okay. So when you take a lot of risk, what happens is you feel real smart when things are going right. So I pile into Tesla, it goes up 1,000%. I'm a genius, right? And then what a lot of people do is then they really buy into this and then they take more risk. And they continue to do this and make more and more money because it reinforces how smart they are and how rich they are now because it keeps working. It's like confirmation bias. So we all have these biases that then like lead to behaviors that are stupid. And it can be with a lot of things. We all also do this with dating. We do it with a lot of things where we have certain behaviors that make no sense, right? I used to break up with my girlfriend and then get back together with her and then break up again and get back together. And like, we all do this. I'm sure you've done this too. And it's like, why do we keep doing this? We didn't end up with that person. And whenever I'm talking to a young person, they keep breaking up with a boyfriend and, whatever. I said, listen, it's not going to work. Not going to work because marriage is real hard. And if you can't get through going to parties and hanging out, you're not going to get through 2 kids for sure. For sure. Okay.
I love that.
For sure. So investing is the same way. Like you have these biases and people think that they're so smart because they're making money and they take more risk because of it. And then it confirms their smartness because they make even more money until they're over leveraged and totally exposed and things change.
And that's what happened to you?
It happens to everybody. The only difference between me then in 2000 to today is that I know not to do that anymore.
Mm-hmm. So what was that big loss like? I mean, walk us through that.
Well, it's real painful. Losing money is painful. I manage billions of dollars. I don't like losing money now any more than I like losing money then. And now I get to lose like 20 or 30 million in a bad day. Yeah, we swing 20 to 30 million a day. So what I used to lose then seems like peanuts, So I have an emotional disassociation with money, which is a very important skill if you're going to be a successful trader. I have no physically emotion, like I do, but I suppress. So to be a good investor trader, you have to be able to suppress emotion when dealing with large amounts of money and when things aren't working for you. It's very much like running a submarine or a battleship in a battle. That is the way I look at running my firm. I run a battleship. Mm-hmm. So when things are good, like now, we're all ahead full, but I'm very skeptical when things are good. So it actually makes me more nervous in these times than when markets are bad.
Sure.
Because we have to be very prudent. We got to keep our risk levels within range, but we're making money every day. And we know that's not right.
Right.
We know it's not right. So that way, like when Corona came, that was the best bear market we ever played because we were prepared for it. We were prepared for it. Now we didn't avoid losses because that's impossible, but we lost 20% and the market was down 35. You can absorb that. Okay. But when you're down 35 and the market's down 35, wow, you're going to have to sell something and you're going to lose money. So I also learned the importance of having dry powder and having money because you cannot predict where the market's going to be. You just can't. You can't predict what China's going to do in Taiwan tomorrow. You just can't predict things that could really move markets. And then if you have no ability to take advantage of especially extreme declines, you're missing out. So I look at it the opposite. I actually hope for the extreme decline because I'm ready to take advantage of it.
Yeah.
That's how you make real money. That's how you make real money.
How did you transition from being at SunAmerica to eventually on your own?
Well, I had been running my firm for a long time. And so transitioning to be on my own was easy because I had to deal with BS every day. So like between the management I had to deal with at my firm and the management I had to deal with SunAmerica, which became AIG. So when they became AIG, it kind of went downhill because Eli Broad used to run the company, was super smart and aggressive. And then when AIG bought it, it became an insurance company and it was just sitting there, and Eli made his 20 billion or whatever and was done. so, I forgot where I was going with this, but where were we going with that question?
I was just curious how you transitioned to being on your own and having your own.
Yeah. So like when I started my own firm, it was just like, I had my partner and it was like, this is great. We can just like do what we want to do now instead of having like 14 people tell us it was a bad idea who all sucked, And so like one of our ideas was like to build our firm on the internet with social media. And at the time, nobody was allowed to do social media and nobody was doing social media except for us. And we were posting on Facebook. That was all you had back then. And we got fans. And I was like, this is cool. And everybody told us we can't do it. And I just kept doing it. So when the financial crisis happened, they fired all the compliance people that were trying to stop me. So for 2 years, I was able to post on social media and build a huge following on Facebook when, there was no compliance person to say no. And then they hired a compliance person, this woman at AIG, and she came in the first day, saw what we were doing. It's like, you can't do this. I said, we know. I was just waiting for you to show up again. And it's been 2 years. So, it's worked out pretty well for us.
Why weren't they happy with it?
What?
Why weren't they happy with what you were doing?
Well, because there were no rules. So social media didn't fall under any rule in the securities industry. Like, what's the rule? Is it sales material? Is it a letter to a client? Do I have to pre-submit for approval, or can I just do it and then submit? Like, what's the policies and procedures for social media, archiving? There's a million rules for everything in my business, So then she said, she was real smart too. She goes, well, I like what you're doing. And the government put me in here to like fix AIG, but there's also this FINRA pilot program. They're trying to figure out how to regulate social media. And do you guys want to be a part of it? Because you're the only firm we can even think of who's using it. So we helped FINRA make the rules for social media. Now, at the time, it was like, it's kind of historic now because now everybody's on it, but we would like write a week's worth of posts and send it in to compliance to get approval. And then I would like post on Facebook one post a day, like that was pre-approved. And, that was like the process,
Wow.
And even today, we were the first firm on Yelp. We're the first firm on Instagram. I was one of the first FinTwit people on Twitter.
Yeah.
And we still get compliance people who push back. And I literally laugh at them now because I'm in charge.
That's fascinating. Well, obviously, you know how to reach the right crowd, but millennials aren't really great at investing. So first of all, what are your thoughts on just that generation that's obviously now growing up with social media and the one after it? And then how did you get into Bitcoin? How did you first discover it?
Yeah, I like your questions. So I love young people. I actually don't like old people that much. I don't mean I don't like old people. Let me rephrase that. People my age, we get old. It's what happens when you get to my age, and you're a lot less fun and you're a lot less innovative. It doesn't have to be that way. It's just like, maybe that's just aging. I don't know. So I fear that, actually. So young people are like my lifeblood, because in my heart, that's where I'm at. In my heart, I'm still a 32-year-old or whatever. So like, if you want to find where the world's going, if you want to have constant motivation and energy in your firm or in your workplace, you need to have young people around. And as well, we have experienced people who are older too. But there's no doubt in my mind, especially with the way the world is constantly changing, that having and giving young people responsibility too, not just having them, give them responsibility. I literally have a 25-year-old woman, sort of overseeing our Bitcoin program right now. It was like her first job out of college, and she's super competent, super competent. It's like, I don't care if she's 25. And I tell her this all the time. I just said, don't say your age around me, because like, you're super competent. So I don't care, like how old you are.
That's great.
So just because you're old doesn't make you competent. So what we find with older people, a lot of times, they're so set in their ways with their thinking. When Bitcoin comes around, they can't get around it. They can't understand it. They can't grip around it, just like I was when I first heard about it. But the difference was, I was like with young people, and they kept talking to me, and then I kept listening, and then it hit me. And it hit me, I think it was 2014. and it's the anniversary of this show. It's called The Cash Cycle. And I did it with this guy, Kazanomics, Roger Ver, who started Bitcoin Cash, and a bunch of other Bitcoiners. I am friends with Brock Pierce, who is one of the original Bitcoiners. And he was really determined, because I was saying what bullshit Bitcoin was. He was really determined to educate me about Bitcoin. So Brock made me go to lunch with him, and he's like a psycho. Like Bitcoin, OG Bitcoiners are crazy people. Okay. They are like crazy people. And that passion is what convinced me. Not anything they said, because I was fully convinced that this was probably going to blow up, and building a new financial system was super hard when we did it in America. Like, are these crazy people really going to build another one? So I didn't think it was possible. And there were so many things in the SEC. I thought they'd shut them down. I thought the government would shut them down, because there's no reason the government would let this. It's bad for the government. But they kept talking. So I bought some Bitcoin. I bought 10 Bitcoin in 2014 for $5,000. You're smiling, but it didn't work out that good. I would be smiling if I had those 10 Bitcoin today. But I did it as an experiment, because I wanted to see if it worked. Like, if I bought Bitcoin, could I buy something with it? So I immediately turned around and I bought a computer. Dell computers allowed you to buy a computer in Bitcoin early on, and NVIDIA allowed you to buy graphics chips. So I decided I was going to buy a computer and a graphics chip and build a VR gaming machine with Bitcoin. So I bought the computer. I bought the Bitcoin for 400. I bought the computer for 750. So Bitcoin had gone up. So it was 1 Bitcoin I spent on that computer. Now, it doesn't work very well today. 7-year-old Microsoft computer. It's in my kid's room. He used it during the COVID for his school. And it's now a $58,000 computer today?
Yep. That's deflationary monetary policy for you.
Deflationary monetary policy for you completely, right? And then I bought the card, and then I tried transferring some to people just to see how that worked. And then I had an issue with Coinbase. So this is the first of many lessons I learned about the crappiness of Bitcoin exchanges, and the lack of transparency, the lack of accountability, the lack of customer support. And it started with Coinbase. Coinbase was the worst. And I have to say, from where they were 7 years ago to today, they have come so far. Now, they're not much better today, but they're better. And I own stock in Coinbase, and I like Coinbase, but they're hacked constantly, and the security is weak. Okay. So what happened was, I had this problem with my Bitcoin wallet or something, and I couldn't figure out what happened to my Bitcoin. I couldn't get it out, and so I was trying to get in touch with Coinbase, and there was just no way to do this. Mm-hmm. So I got super pissed off, and I was like, how do you build a financial system where nobody can talk to anybody and nobody can get their money out of it? I go, this is the worst. This is the worst. So when I figured out what the issue was, I immediately sold half my Bitcoin and took back my money.
Oh, no.
Leaving me with 3 Bitcoin now, which is basically what I have today, and so when I started our Bitcoin program at Gerber Kawasaki, first of all, I partnered with Gemini, because Tyler Winklevoss is a genius. I love this guy. This guy is great. This is the guy who invented Facebook. Let's be real. Okay. Zuckerberg is a scumbag. That's what we've learned through history. And he stole Facebook from them. That's what happened. Okay. And in their revenge, they cornered Bitcoin. They bought 1% of Bitcoin when they figured this out. Now, they figured it out at the same time I figured it out. I literally said this to Tyler. I go, the difference between me and you is I put $5,000 in it, and you put all the money you had into it.
Yeah. Yeah.
And he's worth 5 billion and I'm not,
So now they're going to have this metaverse competition, right? And I swear, I think that Mark Zuckerberg's not, or at least he's not admitting he's in Bitcoin, because there's still just like this tension between those forces.
Well, Zuckerberg is the most disliked person in the world, pretty much. And I think it's well warranted, and Sheryl Sandberg being second. The fact that he thinks anybody wants to play in his world, when we all know what's going to happen in his world, which is basically horrible. It's a horrible world. He's going to fail. And Oculus is janky, crappy hardware. It just isn't good. I've bought every Oculus. I've used every Oculus. It is not the metaverse I will be in. The metaverse exists today already. It's called Call of Duty Warzone. It's called Roblox. It's called League of Legends. We already live in the metaverse. Yeah. Us gamers who've been around for a lot longer than VR headsets have been. Okay. So I go into the metaverse all the time. My kids are in the metaverse and Roblox. Roblox is the metaverse if you really want to know who is the metaverse really.
Well, and that's really the world where coins, digital coins and currencies had value for the first time, right?
Yes. And have utility that people use. And now they had a Nike experience in Roblox. And so I said, kids, there's a Nike experience. Go find it. They found it. No problem. Now they're playing their game in the Nike experience. And next you'll be able to buy your shoes in the metaverse that you'll wear in the metaverse and get the real pair in real life.
Yep.
And design them. This is the future. And I'm all in.
So you're pumped about this world of like tokenization.
I'm a gamer. So Bitcoin came from gaming too, because the original Bitcoiners were actually trading digital assets through gaming before they invented Bitcoin. So they wanted to create a way to move digital assets that you owned in one game and trade it with other players or move it to another game. And what happened was they got shut down by the gaming companies that didn't want an open platform for commerce. They're like, no, you buy stuff from us and that's it. And so they came up with Bitcoin. So Bitcoin was originally created in my mind for the metaverse. It was created for the metaverse. It will be the currency of the metaverse. And that's our theory.
Well, so when you say, that's about 3 Bitcoins is about how much I have now, what the heck are you talking about? Where do you see Bitcoin going? I'm sure you're not a maxi, you're not all in?
No, I've been through 80% declines of Bitcoin. I'm waiting for another one. We just had a 50% decline this year, right? So Bitcoin's a wonderful asset to trade when it goes down, especially if it goes down hard. Bitcoin is a very, very early asset. I'm very bullish on it long-term, but we are far from the point where we can say its success is guaranteed. We're much further along than we were even 2 years ago. The next step for Bitcoin is what I call institutionalization, which is we are the first institution to do this, and many more now are. Okay. But there are literally thousands of massive institutions that have no exposure today. None. And they don't even know how to get exposure. And we're the only firm that opens up managed Bitcoin accounts for clients right now. Now imagine when like Smith Barney can do that. It's not Smith Barney anymore. It's Morgan Stanley now. So imagine all the Morgan Stanley advisors are like, this sucks. We can't do Bitcoin. And I'm losing business every day because we can't do Bitcoin. Because what's happening is people are moving their money to us because we do Bitcoin. So wealthy people are saying, we want to work with advisors who can do Bitcoin, and they're moving their money to us. So one day Morgan Stanley is going to say, we're going to open a deal with Coinbase or Gemini, just like Ross. Hopefully it'll be long from now. I hope. And then they're going to do the same thing we're doing, which is charging an advisory fee to manage Bitcoin accounts. Mm-hmm. Okay. So when this happens, the value of Bitcoin will soar. So I don't like to do price targets because I don't know what the demand for Bitcoin will be long-term, but I know it'll be substantially higher than where it is today, substantially. So there's $1 trillion value in Bitcoin, let's say for round numbers. And there's, I don't know how many trillions in our system between stocks, bonds, and cash, right? And so even gold has no utility anymore. Gold has no purpose anymore. And it's not even performing like it used to perform.
Right.
Okay.
And that's a 10 trillion. Yeah.
Yeah. So how does Bitcoin not become a multi-trillion-dollar asset?
Right.
Okay. Countries start adapting it. Yeah. El Salvador is a joke, but it's a test case to show what other countries can do. Almost 80% of the countries in the world should not have their own currency. Look at Turkey, for example, completely irresponsible government. The lira dropped, I think like 20% over the weekend or something. You want to see a bad currency, go to Turkey, but the Turkish people don't deserve this. They deserve stability with their money. Mm-hmm. So they're buying Bitcoin. And eventually everybody who isn't in a major monetary system like the dollar will just buy Bitcoin. Because if you're in Nigeria, it makes no sense to use the Nigerian bank. If you're in Argentina, it makes no sense to use the Argentinian bank. If you're in Brazil, it makes no sense to use the Brazilian bank. These are all corrupt and horribly run institutions. You should take your money out immediately and put it into cryptocurrencies.
Why do you think more institutions haven't adopted Bitcoin yet? Do you think it's just a lack of education, or is the regulatory framework just not there yet?
Yeah, it's regulatory framework. The difference between me and everybody else is we're building the regulatory framework.
Well,
I'm not allowed to do this. Nobody said I could do this.
So you're doing it along the way.
Yeah. So here's what I believe. So the SEC is an organization that's here to protect investors. Okay. That's their mission. That is their mantra. They want to come into a firm and make sure those firms are doing what's right for investors and making sense what's doing right. You have to show why it's doing right. So if you kind of go backwards and you say, oh, I want to do Bitcoin, how do I do this the right way? So we approached it like, if the SEC comes tomorrow, what would they want from us? And let's do it now. Let's make it better than what they would want from us. So when they come, because they will, we'll say, here are the policies and procedures. Here's the way the program works. Here's the way we're protecting investors. And this should be the blueprint for the industry. Exactly what we did with Facebook 10, 12 years ago, we're going to do with crypto and the SEC when they come. So we have bought insurance. We have checks and balances. We have AML procedures, KYC procedures, asset allocation rules. We have a whole manual that we're building around it, which other firms, what happens is until their lawyers and the SEC says it's okay, they don't even begin.
Mm-hmm. Right.
But see, the SEC's job isn't to make rules. The SEC's job is to protect investors, and they make rules as a byproduct of enforcement actions when people are ripping people off. So when they go in and they say Ripple is BS, which I thought the whole time, and they shut it down, okay, they're doing that because, not because Ripple is so bad, it's because they're saying, are you protecting investors? And if you can't show me, we're shutting you down. And so I think they do a great job. And if they come, we're ready, and we'll hopefully create the standard for Bitcoin in our industry. But until there is one, most people won't play because their lawyers will say, oh, what are you, crazy? What are you, Ross? What are you, crazy? See, most people function around their lawyers in our business. And the problem is lawyers are not risk takers. That's not their job. They're risk aversion takers.
Right.
So if I listened to my lawyers my whole life, I wouldn't be here.
Right. Well, I mean, where are you at then? Because if you say you used to think that it could be banned, now it seems like there's movement in both directions. There's the ETF was approved. Bank regulators are looking at if traditional banks can hold Bitcoin. But then on the flip side, you have people like Hillary Clinton, Elizabeth Warren saying, this is going to destabilize nations. So where do you think the U.S. government will ultimately go with Bitcoin?
It's a free country. It's a democracy. And if government was going to do something about Bitcoin, they missed the boat. It was 5 years ago. So this is a bigger philosophical issue about sovereignty. So sovereignty is about power. So the United States is a sovereign power, and you maintain your power through currency. You maintain your power through weapons and jail. You maintain your power through laws. And governments don't want to lose that power. That's why they don't allow you to start your own army. You can't start your own army, although people in the South have started their own army, and certainly many people tolerate it. It's actually not legal. Okay. So, starting your own currency isn't legal. Like, I can't just start Ross Gerber's currency and start using it and trying to convince people to use it, but that's exactly what Bitcoin is. So how did they get away with this? It was pretty lucky, because I thought the government would step in many times because it's in their sovereign right and power to stop money printing of, non-US money. But the Bitcoiners are smarter than the government. So they decentralized it and they put servers all around the world. So if the United States said you couldn't use it, it wasn't going to matter. China said you can't use it. China banned it. One of the biggest countries in the world. Didn't matter. Doesn't matter. There's servers in Belarus. There's servers in Afghanistan. Who knows where they are? They're everywhere. It's a brilliant system. So when it was young and early and vulnerable, yeah, you could have taken it out. But now Game over. That's why I'm all in. Now, I'm not all in, and it's not 100% of my assets, but I'm all in as in we're building a Bitcoin business. It's growing rapidly. And I very much believe cryptocurrencies are going to replace the traditional banking system over the next decade.
Do you think that Bitcoin will ride along parallel rails with the US dollar, or do you think the dollar will cease to exist eventually?
Well, no, I mean, God, the government's got to print dollars. Like, it's not going to cease to exist at all. You're going to have a lot more dollars in the future than we have today, right? They're just going to be worth a lot less. What I think is at some point, the government will start paying interest and loaning people money again, and the dollar will have much more utility. The only reason Bitcoin's this successful is the dollar has no utility. So if I was getting 3% on my savings account, why would I hold Bitcoin? You know, it's like, then you get this competition for the money, you know, and if Bitcoin goes down and I can get a guarantee in a US bank, it's, you know, you sort of like go, well, maybe I want to have both. I want to have dollars and I want to have Bitcoin. And that's what we see. So we see dollars as still the transactionary currency of the United States. Like, I don't think it makes a lot of sense for everybody to be trading Bitcoin to buy gum, you know, like I'm not going to walk around buying gum in Bitcoin. It just doesn't make sense for a lot of reasons. So the dollar is great for small transactions, and I see that continuing in the future. But when you talk about transferring money or large purchases or buying a house or whatever, like you spend all this money wiring money and all this kind of stuff. Don't have that with Bitcoin.
So you don't think that Bitcoin will become the global reserve currency and we'll all be transacting with this neutral currency and basically sats or fractions of Bitcoin?
Well, remember, we don't transact in gold very often. So gold is still a global reserve currency, but we don't use it in transactions. So I see Bitcoin with a similar path where it's a global reserve currency and it can be used in transactions. But have you ever like sent somebody a Bitcoin and see how long it takes?
I mean, yeah, I've sent it to a wallet. Mine's pretty instant.
So we do this all the time. We send a Bitcoin and we send Ethereum at the same exact time. Who wins? Ethereum times 1,000. Okay. So like when you transfer newer coins, it's like almost instantaneous. I transferred some EOS. It was like boom, boom. But when you transfer Bitcoin, it could be a 30-minute wait. That is not efficient.
How do you see the future playing out with the other cryptocurrencies where a lot of people right now conflate all of them, right? And they see Bitcoin as way too expensive, so they start to play around with some of the other ones. And I think they almost look at it as penny stocks, right? One can take off and people think that anything could be the next Bitcoin. So where do you think some will just, win the horse race and others will fail and Bitcoin will be the king? Or where do you see them all playing out?
Well, we've done this the last cycle with ICOs. Same idea, all these NFT coins. And so look at it this way. So there's this concept of worth, okay, or what's something worth, or we call it intrinsic value. So let's say you're talking about something subjective like art. What is the value of art? And what is even the definition of art? Because it's so broad, right? So it's completely like subjective. So like one man will pay $5,000 for a painting. Another man might think it's worthless. Okay. So when everybody feels really good about art, they'll pay for whatever, even if it's worthless. Okay. How do you know when art is worthless or not? Is when things get bad and you need to sell that art to like pay for your food and nobody will take it. That's when you realize the intrinsic value of what you bought. Now, if you own a beautiful gold watch that you bought with Bitcoin when things were really good, and then things go bad and your Bitcoin's down and you need money, you can go sell that beautiful gold watch either online or back to the watch store for real money. No problem. Okay. So when you're buying a coin, you have to ask yourself, what is the utility of this coin? What about this coin gives it value? Why will it retain value when the tide goes out? And why will it regain its value when the tide comes back in? Because it was 100% related to the utility. Like, that's why I like Ethereum. It's so easy to explain the utility of it. Okay, smart contracts, the root of smart contracts. It literally is the root of like what I consider one of the core things that will be built on in Bitcoin. Okay. And I own Bitcoin because it's really like the OG roots of crypto, right? And it's like inflatable. So when you think about coins, whether it's Sol or Cardano, or Bitcoin Cash, which are pretty established coins, and then you go down the coin list to the just junk coins, they call them shit coins for a reason. But what happens is every cycle, all that stuff gets wiped out when the Bitcoin winter comes. So Bitcoiners don't understand Bitcoin winter. Okay. Bitcoin winter is part of being a Bitcoiner. And it's cold during winter at Bitcoin. And it happens all the time. And that's what we tell people. If you want volatility, it's in cryptocurrencies, but it's volatile down too.
Yeah. And
so you got to have a reasonable amount of money in this, and you got to have cash to buy low when things get bad. And what we advise people to do is just dollar cost average, which is buy a little crypto every day. That's what I do actually. And I've been doing it for 7 years. I just buy a little bit of crypto every day. I don't care what the price is. I don't think about it. What I think about is when all these institutions one day have it, when my kids are driving around in their self-driving cars, they'll be using Bitcoin and it'll be maybe worth 500,000 and it won't trade much at all. Right. Because it'll be so established, it'll have such liquidity that essentially it won't move that much. It'll be more like the dollar. Right. And so while we're in this growth phase, while it's adoption, which could take 5 to 10 years or more, I'm saying 10, it's just such a good time to be in the core coins.
Yeah, I love that you said dollar cost average, because I think one thing I'd love for you to share is for the average person who's just hearing about it. I think right now there's such a spotlight again on Bitcoin. How much do you think the average person should allocate? Because I've had other guests on like Lynn Alden and Anthony Scaramucci. Everyone sort of agrees that a 0% position's not the right one at this point. But some people are worried about the volatility. They don't know what the future holds. So where do you fall? 1%, 5%, a little bit more? Where would you you allocate a portfolio?
I did a Bitcoin conference or something, and there was this statistician, portfolio guy, and he was talking about the utility of adding Bitcoin to a portfolio and how it adds to alpha versus beta, and how much volatility do you get for every unit of extra alpha, these are the fancy terms I was telling you about that try to make you sound smart, which is basically saying how much extra return do I get for the extra volatility of owning this asset. And so they determined about 3% allocation was ideal for getting the upside of Bitcoin without it really moving your portfolio so much that you get a lot of the volatility of Bitcoin. So if you look at your portfolio as 100%, and if I took 3% and I put it in Bitcoin, it will give me enough alpha, on the upside, that it's worth it to own it. But it's also on the downside, it's not going to wipe my portfolio out or cause losses. So that's the allocation that this guy, through his math, had sort of determined. And it seemed right to me. I never tested that. So at our firm, within our risk management guidelines, we're recommending 1 to 5% of somebody's portfolio being in cryptocurrencies, preferably the core coins. And the reason why we've kept it that conservative, and we were just discussing the issue because we keep having to turn down young people who come to us with 50% of their money in Bitcoin. So they have, let's say, $20,000 to their name, $10,000 in crypto, and $10,000 in Tesla. And we're like, listen, we have to tell you what's prudent. So I'm not going to tell you not to do this because it's your money, but at our firm, if you move your money here, it's just too much risk. These things can turn, and I can't, we don't have clients down 45%. You know what I'm saying? We just don't do that here. We just don't. So if you want to take risks, we'll say, keep your account where it is, and that's fine. But if you're going to move it to us, you have to work within our risk management guidelines. And that's mostly because of what I said before about having to have rules and guidelines to really do things in a way that protects investors. Because if I let that person with 50% of their assets come into my firm and they don't have a lot of money and they don't have a great job, and then Bitcoin goes down 80% like it does, and now that client's down 80%, have I protected investors? Mm-hmm. And the answer would be no, I didn't protect them at all. So if you're 20 and you have half your money in Tesla, and we see this all the time, I can't believe it, because I attract the half Tesla, half Bitcoin people.
The two best performing monetary assets of the last decade, though.
They love me because I'm bullish on it and they've made a fortune. But this is what I'm telling you. Just because we made a fortune doesn't mean that fortune is going to continue at the same pace. In fact, you have to be very doubtful that it will continue at the same pace. So maybe we want to diversify a little bit. And then they don't want to work with me because they don't want to diversify.
So, like, what do you think of someone who, independently of your firm has 90% of what they're worth in Bitcoin right now?
Well, I think they probably made a lot of money, right? So yeah, they're probably pretty happy, and I would probably buy a house. See, one of the things I do, because I do trade too, which I don't really do for clients, but I do for myself. And let's say I make a trade. Like the other day, I made a Tesla trade. I was really, really happy with it. Super lucky. It's like super lucky. And I made, let's say, 70 grand on this trade. I could just like put it into a bunch more options and like double up, but I don't do that. I take a part of that money and like I bought a original Doors poster from 1967 for a couple grand, because it's like a hard asset that has value, intrinsic value, especially to me, because I'm a huge Doors fan. Named my son, his middle name's Morrison. And this poster is amazing. It's a piece of art. You know what I'm saying? Or you can buy a watch, things that have value that you can convert your money into, that you can kind of keep. And then I'll put some of that money, back into stocks, and then I'll put the rest back into cryptocurrencies. But like when you win on a trade, I don't just like double up on that trade again to make even more money. Like I try to be prudent with assets and have many different assets that have different values, because my goal is financial security. Once again, not maximum wealth.
Got it. Okay, well, I'm going to start to wrap up, but I do have a question just about the macro picture we were sort of touching on earlier, and it even, I think, touches a little bit on this idea of crypto winter. We're so leveraged right now, and they keep printing, and we're hitting, it's like a game, it's like watching a game show or something, like a video game. It's like all-time high, all-time high, all-time high. Do you think that we're going to have a massive correction at some point? Do you?
That's an easy yes, right?
Well,
that answers an open question. So,
but I mean, it seems, but it seems like they've outlawed corrections, right? Because they just print more money if anything starts to go down. So where do we go from here? Because I feel like one direction is inflation, and one direction is a massive market crash that no politician would allow to happen, even if it's what's necessary. So where do we go from here?
You brought up an interesting point here, and one for a final question we don't have time for, which is philosophically, has something really changed in the way we manage money in America? So philosophically, what you're saying is exactly what happened. If the Fed can just print unlimited money to avoid any recession, maybe we should just not have recessions again. So what he proved was, if I just give everybody money, we won't have a recession. Well, that kind of makes sense from Econ 101, right? And there hasn't been a consequence to this. So we've built enormous wealth because basically there's no better party in the world. There's no other place. So now China is uninvestable and money's coming back here because you can't trust anything they're doing. And Europe is a disaster on every level, from Brexit to the EU to Russia and Ukraine. And like, why would you put money there? It's the worst economy in the world. They've had negative rates forever. So it comes back here. How about Latin America? No, mess, horrible. Brazil, one of my favorite countries in the world. It's the worst run country in the world. One of a disaster. Money comes back up here. Brazilians with money move their money here. So all of a sudden we had this competition between Europe and China, and we just don't anymore. And hence markets have higher values. Maybe America's just worth more in the world today than it ever was because of our ideologies and the way the world's changed. Okay. So that's my argument that this isn't a bubble. In fact, the 21 PE forward PE is far from a bubble. Okay. It's just an expensive stock market. A bubble is when all rationality is gone. And you could say that about NFTs a few weeks ago, where somebody's going to pay $280,000 for a JPEG. That's a bubble. There's no intrinsic value. You can argue it all you want that CryptoPunks is worth what people are paying. They are not. Okay. And so, as I say, if there's somebody dumber than you willing to pay more and you make money off of it, it doesn't make you smart. It makes you less dumb than the other dummy. Okay. See, a lot of people think they're smart because they made money trading an NFT, but they're just less dumb than the people behind them. Okay. Show me the intrinsic value of a JPEG link to a monkey. Okay. So there have been many pockets of bubbles we've seen, but they seem to burst pretty quick. Like the SPAC bubble we had. The SPAC bubble was ridiculous. You know, Shamath is a hero. Shamath, they're all a bunch of junk SPACs and they're all now worthless or whatever. And because the market is not actually that unhealthy. It's actually just expensive. So a bubble is when rationality is gone and everybody's in and everybody's playing. And you can't say that about crypto. By far, not everybody's in. If you're 25 and you go to a party, everybody's in. But if you're 50 and you go to a party, nobody's in. It's kind of funny.
Yeah. So, I mean, I guess what I'm getting from you is almost
So I'm not that worried. I don't think we're in a bubble right now.
Really?
No, I think we're in a very expensive stock market that one should be careful with, but we'll be in a bubble if they keep this up. But I don't think that's what's going to happen. I think the Fed's going to raise rates next year. And the minute they do this, prices will come down.
And how big of a crash would you expect?
It's just depending on the Fed. So right now, you know, over the long term, we value the market about 18 and a half times earnings. I think you could argue maybe it's worth more now because of China, but like, let's just use 18 and a half. Right now we're trading at 21. So a 20% decline in the market, we're buyers. You see what I'm saying? So I think in September, the market was trading at a 20 PE, which is pretty high for the stock market. But when you say over the last 10 years, it was like post-financial crisis, you know? So like if you go back to the 90s, the PE was closer to 30 on the S&P most of the time. And at the top, it was 32. So when the PE of the S&P forward PE is 32, we should be well out of the market. You know what I mean? Right now, it's at 21. So earnings were up 39% this quarter. It was the third largest increase in the last decade. And earnings in the fourth quarter are looking to be up 20 to 30%. And earnings next year are looking to go up another 10%. So if you start doing those numbers, the market's expensive for a good reason, but huge amounts of profits are happening right now. Just huge amounts of profits. So that's why I'm saying it's not a bubble, because the real profits are there. And it's like, look at Apple. I mean, we just bought more Apple. It's probably the least like new idea I've ever had since I've owned the stock for 50 years, but their Christmas is going to be huge. It's just going to be huge.
Well, especially when they release the car. I mean, I think that's going to be
There's no car coming, so get over that.
You don't know?
Oh, Apple car. Come on.
I thought that was their next move.
Yeah, I thought they were going to make a TV set too. You know, I thought I was going to get like a matte charger as well, but I was just in the Apple store and it's the same exact products for the last 5 years. You think they're going to roll a car in there?
All right. Okay. I want to be sensitive of your time. I just have one last question.
I'm just teasing though. I am teasing.
Okay. Just, you know, for the average person maybe out there.
That's not my time. I just have a meeting with lawyers next. So yes, you're much more fun.
Okay. Okay. I promise this is the last question. What's the big takeaway right now with the market that we're in, with Bitcoin around? I know you say we'll have a crypto winter, but you know, the average person out there, it's getting harder and harder for the average American to save, to afford college, education, housing. And I think that's why people do see, you know, sort of this idea of a bubble, whether it's in assets or housing. It's just harder for the average person to achieve that American dream. So what's the big takeaway? I mean, we have things like Bitcoin now, but what's your takeaway for
my takeaway is that's not true. I don't think it's hard at all. In fact, everybody's making more money than they've ever made. So if you worked at Walmart a year ago, you're making more money and they're giving you raises, and people are fighting for labor right now. If you want to work at a restaurant today, you can make $25 an hour. That's what nannies make today in LA, $25 an hour minimum. So minimum wage in LA has moved up to $25 an hour.
But the cost of living hasn't. The
cost of living has gone down. Okay. Now, why? How can you say that? Well, look at what prices have gone up. Oil. Okay. And with that comes transportation costs, right? So some goods and services are affected. Now think about it. Buy an electric car. You just cut your cost of living by $5,000 a year. The average person makes $70,000. That's 6 or 7% decrease in your cost of living. That's the entire amount of inflation for the entire year. Just buy an EV. Done with inflation. Your cost of living just went down. Okay. So people who spend money complain about costs going up because they're spending money on vacations, for example. It's way more expensive to go to Hawaii than it was before. It's way more expensive to go to the national park than it was before. Trust me, I own MGM casinos. The people who visit our casinos are not rich people. Record amounts of gambling is being done right now. Records amounts of gambling on the strip, packed. These people have more money than they've ever had. It's the economy's booming. So this like, oh, the average American's getting pinched or whatever. No, the average American is, a lot of them are better off than they've ever been. So it's weird. So a small group of people have been really disproportionately affected negatively by Corona, and the large group of people have benefited from it. Why? Because the government gave them tons of money. Government gave them tons of money. I literally, my nanny tells me about her friends who won't go back to work because they're still getting these checks. Okay. And they literally have parties on the government's checks. And I said, shouldn't your friends be like paying off their debts and whatever? And she's like, yeah, but they just don't care.
It's really crazy. I mean, debt has just been so normalized. Our country's in debt, paying their Visa with their MasterCard.
How about buy now, pay later?
Yeah, it's really sad. I mean,
it is sad. It is sad.
Well, thank you so much for sharing your time. Where can people find you? Or obviously you have a firm that you'd like them to check out, right?
You can find me in Santa Monica, if you're walking around. No, you can reach us at gerberkawasaki.com, of course. You can follow me at Gerber Kawasaki on Twitter. And even better yet, you can actually buy our ETF on the New York Stock Exchange, symbol GK. And our ETF is an actively managed multi-thematic ETF where we invest in many of the things we discussed. And one of them is cryptocurrency. So we have investments in Square, PayPal, and Coinbase and now this company called Silicon Valley Bank that also has exposure in these areas. Into our sort of fintech sector. And of course, if you need financial advice, you want to get involved with crypto and you need help, that's what we do. So feel free to reach out. And also thank you for having me and asking such insightful questions. I really enjoyed it. I get tired of sort of the typical Tesla interview, so thank you for asking me questions. And someday offline, I will go into more detail about my childhood.
Perfect.